Hey everyone, I am live right now and just testing out also to see how the channel works on the YouTube. This is the first time that I've done a live direct to YouTube video, so seeing how it works, seeing if it works. It actually seems like it's a pretty good little setup. And you can see that the real life is buzzing in the background, and there's my dog. Say hello. So going straight into it, there's a few things that's going on. First and foremost, just having a little look at some of the data. Keep your eye on what is happening in November. The markets are all up, and obviously it's pretty fantastic. Everyone's happy about it. The relief of the tensions that were going on between the Republicans and the Democrats, with Trump deciding that he now is okay to leave and he's actually going to assist with the transition, has actually ticked up markets quite significantly. My dog really just knows when I'm doing this. Isn't she fantastic? It's the problem. You're working from home. Anyway, Biden's team is now going to get assistance from Trump with regards to the transition. So that was one big risk event that I had has now been removed. Biden has also picked Yellen as his Treasury Secretary, which is going to be fantastic. Yellen, a very, very smart person and also very market friendly. She'll get the printer out and to be able to actually probably, if anything really goes wrong, go into equity markets and directly buy stocks herself. So that's going to be amazing. So the old Fed chief, Janet Yellen, back in business, back actually in the White House now. So she's very smart and very market friendly. She's going to be easy to confirm too. So that'll be able to get through regardless of what the Senate looks like. There's still a Senate race, two seats in Georgia that to be decided in January. That's a runoff race. It's potential that the Senate can still go to the Democrats. Pay attention to that, which then means that the blue wave is in effect and that they'll have control of all three levels of houses. And then my investment themes for a blue wave, they go into effect. Wait until January. Don't trade what's ahead. Trade what's on. Now, November. The average return between the years of 1964 and 2019, the average return for November is 1.2% positive. 68% of the times it's positive. The best November ever is 10%. We're probably going to beat that this month, provided the next 5 days are going to be fine. And since this is 1.5 days are gone at the end of this week in America anyway, this is all for the S&P 500. 1.5 days are going to be gone from the end of the week too. So Black Friday is a half day and Thanksgiving is off. So it looks like we're on track to have probably the best November in history, or at least in recent history since 1964. The best month that's ever happened in November has been a 10% up, and the worst month has been 11% down. So the standard deviation of about 4.3%. That's low relative to last month in October. So we're looking at now December is also on average a really good month too. Stay long, stay strong. Now, what are we buying and why? I've been buying VG8. It's a listed investment company, sort of like an ETF. Just call it an ETF, just makes it easier, but it's not. I know that it's not, don't correct me. And it's a listed investment company run by VGI Partners. They're very smart guys. And it's with an Asian theme, just on that growth theme of really good Asian stocks. And I like the idea of emerging markets. They don't all have to be techie. They don't have to be high growth. They don't have to be volatile. That doesn't always have to be on the cutting edge of some emerging market amazing thing. So just be aware of that. So the VGI Partners one that they run, the stock code is VG8. It's their Asian fund. Biggest holding is Nintendo. They've also got things in there like, and I wrote all these things down, but now they've gone. Things in there like Kirkman. I've completely forgot the name. The guys that make the soy sauce. You got the QP, the guys that make mayonnaise. They've got Richemont. They're a luxury brands provider. Chinese GDP is predicted to be about 9% next year. That is going to drag all other emerging markets up with China as they all catch that wind. Imagine a boat and fish surfing along, or dolphins surfing along the wake of the boat. It's exactly what it's going to be like in that particular case. So we're buying emerging markets. In America, I'm also pretty fully invested in the States as well, taking a bit of heat for the currency on that, but the equity growth is going to be great. I've bought the last couple of days. I've bought IJR locally. That's an iShares S&P small cap. So it's a small caps over in the States. That's been going great. That's just rocketed. And I really should have bought it after the election. I just wanted to wait until we had certainty between the Republicans and the Democrats. We don't. And now we do. So now I can charge into that full-fledged small caps in the States are probably going to get the most beneficial rally as the reopening continues and the vaccine relief. Also from Yellen, also from the Democrats too. So, and those big caps, they're pretty fully valued. So I'm happy to go into the small cap space. I've also been buying over the last few weeks IYC and IYK, both listed over in the States. One's consumer services, one's consumer goods. They've got it's Amazon and consumer goods, consumer services. Imagine what that is. Just buying that recovery, buying that consumer trade, going into last. Americans are, I believe, for the first time in a very long time, super cashed up. Savings rates are super big. They're all ready to go out and spend it. I'm keeping an eye on savings, keeping an eye on retail, ready to continue and to add to those ones. So they're the four big ones that I've got lately that are going on. Fully invested down to about 5% cash, which is in line with most fund managers around the world. So pretty happy with the way that's going. Look, any questions, let me know, but that's what I'm going. Really happy to go emerging markets. Remember, emerging markets will be, according to the recent Bank of America Fund Manager Survey, emerging markets will be the best place to gain outperformance in the year 2021. Buy it now, add to it later, hold it through 2021, thank me later. Look, that's it. I'm going to figure out how to switch this thing off, but any questions, let me know. Thanks, guys. Bye.